Makwe Masilela from Makwe Fund Managers joins us now to speak about what transpired on the market today. Makwe, a red day across most of the major indices, resources, precious metals, saw a lot of pressure coming through today. And of course, the rand at around 18.58 against the US dollar. Is it purely a story about US inflation and what's likely to come out there, or are there other factors?
I think it was exacerbated by the fact that we've seen the Chinese exports for April slowing more than expected, and that itself is telling you or signaling that the global trade is not okay, and itself it confirms that China have to start relying on their domestic spending given that 3 year of lockdowns and very strict ones. So we know that we've been relying more on China as they started reopening in December to at least try to lift the global economies. But so far, that's disappointing. And yes, you are right, inflation numbers coming out of tomorrow, those are of more importance or of immediate importance. But we still have the Russian-Ukraine issue and also the debt ceiling when it comes to the US. And the very same disappointing Chinese data also negatively weighed on the likes of oil prices.
Yeah, the oil prices are quite low indeed, and I suppose that's an indicator, like you say, that growth that we were anticipating is not going to be as much as was thought. And this I'm saying globally as we see the slowing down of the sale of big commodities like Brent crude.
Definitely, and we know that China becomes is the largest importer when it comes to crude. We know that China itself is the largest consumer when it comes to some of the minerals, and we know South Africa, we export a lot of our minerals to China, and more importantly, the very same minerals, they happen to be our biggest revenue earner when it comes to dollars, and it's not surprising that as much as we've seen the dollar edging up against major currencies, that issue when it comes to the Chinese data also had a negative impact when it comes to the rand, as you said earlier, that it continues to weaken. Probably it managed to find a new default, which is anything above 1830.
Company updates now, and this is a positive one. I mean, there has been some developments from late last year, Makwe, around Steinhoff and the compensation that they would be giving to those who were swindled by the company. They'll be starting to make up payments from tomorrow. Interestingly, it was also announced that Tempo Sealy was buying mattress firm owned by Steinhoff for $4 billion. Are they selling off assets to make sure that these swindled investors get their money back?
Yes, they have to. Number one, they stand with a debt of almost 10 billion euros, and we know it's due end of June, and we know that the shareholders meeting to try to vote that that debt must be extended by another 3 years, and if that gets to pass, it will end up with lenders holding almost 80% of Steinhoff and the equity shareholders owning almost 20%, and definitely it will be delisted. So where will Steinhoff get the money? We've been seeing that they've been selling some of the stuff when it comes to Pepco, and we know they can still continue to sell more when it comes to the European operation. So with this deal, the guys expect to get almost 2.7 billion US dollars in cash, and the rest will be in shares, and they will end up owning almost 7.5% of that new entity. And if that 3 years extension gets to be granted, that also gives them more time to be able to sell some more of the assets, and that's the end of Steinhoff as we used to know it.
Yeah, very, very sad end to what was quite the conglomerate indeed. Quantum Foods, they are released their trading statement today, Makwe, and while they saw an uptick in the production and sale of eggs, they did have a huge slump when it came to the bird flu that hit them quite hard. I think they lost just around 34 million rand from that. What did you make of that trading update and really the outlook that they've given? We do know other producers of poultry like Astral have been reeling from the power cuts.
Definitely, because the feed costs are high, and yes, fortunately for them, that HPA1, that cost of almost, which is a direct cost of 34 million, is not yet reflecting on these results. But yes, remember initially they told us that they expect their profits, etc., and earnings per share to go down by almost 100%. So now, because of operating efficiency, financial performance, and also good production or sales when it comes to February and March, when it comes to eggs, they expect now their headline earnings per share to be down by at least 87%.
Yeah, no, thank you very much for that update, Makwe Masilela. Interesting about the eggs when they are actually very expensive at the moment. For that update, Makwe Masilela.
Is there a food item that's cheap nowadays, Rupiwa?
No, absolutely
Everything's
not.
Just going up. Did you see the news that earlier? Red meat is also scarce.
Yes.
And when there's a shortage, the demand goes up, and the price
goes up.
Goes up.
So very interesting times indeed, Bradan, when it